dang it, Jay Powell, you gotta give us the hope. You give us the hope that it's all just transitory, and then you take it away from us. Hey everyone, me Kevin here. Oh my gosh, this is the kind of day to bring out the diamond hand cup and go, dang, I'm glad I've been raising some cash because, woohoo, Jay Powell is really good at coming into a hot market and giving you the finger. That's what he did in February of 2021. Now we know he came around to rescue us in 2020, okay? But that's different. That was 2020, okay? February of 2021, the market starts falling. Everybody's expecting Jay Powell to come into the rescue, and he's like, yeah, asset valuations are high. Market tanks. Now, after like a year and a half of don't worry, inflation's transitory, it's time to retire transitory and potentially end the taper months earlier. Now, Jerome Powell did not specify exactly when. That's because he needs to discuss this with his fellow comrades over at the Federal Reserve in the December meeting, which comes up in the next few months. In the next few weeks here. Now, what's really interesting, though, is the market's reaction, because the market is actually finally not happy about something. And the market has been very, very good about buying the dip on every little bit of news. I mean, Friday, everybody freaked out because of Omicron, which turned out to be a nothing burger on the belief that essentially the impact of the Omicron would be relatively mild on people. That, even if vaccines were slightly less efficacious, people with Omicron appear to have mild symptoms like extreme tiredness or other symptoms that are just not as severe as something that you might see with the Delta variant. And this makes sense to some degree because the more mutations you have of the spike protein of a virus, sometimes that could make a virus more contagious. Sometimes it can make a virus more combative, but it could also go in the other direction where it becomes more contagious but less effective inside your body and therefore less damaging, which is obviously a good thing. Now, over the weekend, everybody's like, don't worry. In addition to the symptoms being fine, the vaccines will work. And even if they need a little fine-tuning, we'll have a new vaccine by March 1st. Well, great. That's wonderful. But then Mr. Moderna himself, the CEO of Moderna this morning, says, yeah, we're expecting a material drop in the effectiveness of our vaccine, and scientists are basically in our office saying, yeah, this is not good, this is really bad. And it doesn't help that Regeneron, this is the cocktail you essentially go on in the event that you get sick with COVID, you're not vaccinated, you're basically gonna die, and they give this to you to try to save your life, has also seen a material drop in effectiveness, which is bad. These are both very bad. The Financial Times broke both of these stories this morning. And as a result of not just now fears that the treatments we have working less well, but even though symptoms for certain people might be more mild, the fact that treatments aren't working for those who might potentially need those treatments, in addition to the fact that Mr. Jay Powell is now, you know what? Transitory's no more. We're going to have to taper months earlier because, well, now we're really having inflation extend. And honestly, all it's going to take now is China shutting down a few ports over in China, and the supply crisis is going to continue on much, much further. If we get more shutdowns or lockdowns, really the supply chain crisis just continues to get worse and worse and worse, which all just feeds into the inflation playbook. Now, what this means going forward is very important, but first, a message from our sponsor. So you got the Dow Jones Industrial Average down 1.7%. That is an almost 600-point drop. You've got the S&P down 1.6. You've got the NASDAQ down 1.74. You've got the Russell down 2.64%. Bond yields, folks, down. That's very interesting. Why would bond yields be down if Jerome Powell wants to bury the transitory inflation term? Well, because they're going to be printing less money, which if they print less money, then that's a sign that they're finally actually reacting to inflation threats, and they're not going to continue to funnel as much money into our economy. Remember, folks, the Federal Reserve, even though they've begun the taper from spending basically or printing $120 billion per month of bonds, even though they began that and reduced that to 105 in November, and we expect to go down to 90 in December, and then continue down the path of tapering $15 billion until we get to the summer of next year, at which point we would basically have no more taper. And then the Federal Reserve can go, all right, now that we're fully tapered, maybe now we can consider raising rates because we fully tapered. This has now turned into, okay, maybe we need to do what Mr. Bostic from the Federal Reserve actually alluded to last week. It's pretty impressive. He spilled the beans last week. He's like, yeah, you know, and nobody believed him. I didn't believe him. We might have to taper not just sooner, but like in the first quarter. Like end the taper in the first quarter of 2022 and then consider raising rates, which is a good way to combat inflation, which is why we're seeing yields go down, less money printing, right? It's also why we're seeing cryptocurrencies fall on this news because, okay, fine, the Fed's finally dropping the inflation argument. They're finally going to combat inflation. But now what we're seeing is basically bond yields go down, crypto go down. Now we have the expectation that come February, we could potentially start seeing interest rates go up to combat inflation. And remember, folks, a lot of folks, at least in surveys that I've conducted, 40 to 60, depending on the day, 40 to 60% of individuals use cryptocurrency as a hedge against inflation. Well, if the Fed is actually going to start doing their job and fighting inflation, then maybe that becomes a little bit less of an issue. Now, that's not to say, you know, okay, fire sale on Bitcoin, time to drop everything. Bitcoin's still doing better than where I just bought it a few days ago. As usual, I always send out every single alert that I make in stocks and options in the Stocks and Psychology of Money group for probably at least the next 6 months. I'm including crypto alerts in that. So, for example, I sold crypto at 57,500 to 58,000. I rebought the allocation that I wanted right around 53,700, and most of it around 54,400 because I saw that as a stronger support line. But anyway, I send these alerts, so you're welcome to use that coupon code Cyber Monday. It's active through the week. I'm taking a vacation this weekend. I will be off on Monday. No market open, no market close. Live stream for me. I will be off on Monday. But anyway, the Cyber Monday code will be available through Friday, so you're welcome to check that out. But anyway, you could see this drawdown here in Bitcoin because not only does Bitcoin generally not move with the market, so you don't really want to call it a market-based sell-off. Bitcoin's got a beta of about 0.5 to 0.6, depending on which index you compare it to, or index you compare it to, rather. But you are seeing a drawdown because we were starting to rally on Bitcoin. Look at that. We ran up to 59,000. We were running on Bitcoin. We were running on Ethereum, and we're seeing that U-turn specifically because now, okay, the Fed's actually going to get out there behind and do something. But look at some of the other pain that we're seeing in the market. And this is really where we want to start looking for potential pain points. So you're seeing crypto-related plays sell off a little bit more extensively. That's normal. But you're also seeing momentum-style stocks like AMC and Newegg sell off. This is the sign that you're starting to have some of the retail community start paper handing, right? Again, not a surprise that you see something like Hut 8 Mining sell off 7%. Good thing I closed that position yesterday afternoon. But you're also seeing software, look at that. Snowflake down 6.8%. It's kind of like everyone's insecurities start coming out when they start freaking out about JPOW. Insecurities are usually in momentum plays and in higher valuation plays like software. Look at Funware. Funware is a momentum play. Or SPACs. 23andMe is a SPAC. Blink is a SPAC. Smile Direct Club, speculative. 6.9% to the downside. Obviously, retail is getting spanked. There's no surprise that Moderna's selling down a little bit now, that their product's not as effective as individuals were suggesting it would be. I mean, I'm pretty sure Mr. Fauci and Biden, as recently as yesterday, are like, hey, don't worry about Omicron. Go get your Fauci ouchie and everything will be fine. Yeah, well, now it looks like everything's not going to be fine. It's exhausting. Anyway, so we're seeing a little bit more of a sell-off in some stocks that were already rotating down, like Sunrun. But look at this, folks. Some stocks that were actually beginning to U-turn to the upside, like Lemonade. It was up 1 to 2% today. Boom, 5% gone. Just straight up rug pull on it. SoFi Technology down to 1755. That's a support level for it. We've been in a channel for SoFi over here. Oh, look at that. It actually broke past it. 1780 is where I have the support line. We just broke past it. It's not good. Hippo down to 3.5. Affirm down to 4.4. I actually sold puts at 131, thinking there's no way we're going to get a J-Powell rug pull. Oops, good move. But anyway, good news is my break even on that one is 126.4, which is basically where we are right now. That's the benefit of selling puts, right? If you don't know anything about selling puts and you just want to learn a little bit about options, Stocks and Psychology Money. It's like literally everything is in there to take you from total rock idiot, which is totally fine, it's not embarrassing, to actually having a pretty substantial amount of knowledge in the markets and how the mechanics of the markets work. But anyway, Yelp, not a surprise. Look at this though, the EVs U-turning. Lucid was actually up a couple of percent today, now down about 4%. The gambling plays have been getting whacked. Here's finally a beginning of a sale opportunity again on some of our faves like Enphase and Nvidia. We have been waiting for these. And look at this, PayPal suffering even more. It broke under 180 for a moment. Cloudflare reversing the gains that it had today. Rivian down 3%. Even Peloton, the stay-at-home play, is getting spanked today. Basically, this is J-Powell. J-Powell coming in here and just smacking you upside the head going, don't you think about continuing to buy the dip. I'm trying to create a crash so I can go shopping in a dip. Anyway, Tesla is actually doing incredibly strong here. I do think there is a lot of enthusiasm and momentum going into Tesla because of 12/9, the potential rumored stock split announcement day, which is, you remember last time Tesla announced the split, it ran up like 80%, so people are like, oh my God. Also worth noting that Backed Holdings was up 17% today. And that's because Bitcoin was rallying, right? We ran up to about 59,000. Now it's only up 0.98%. This is a cryptocurrency transaction processor. Fascinatingly, though, I don't even know if that's a word, Apple up 1.87%. I'll tell you exactly why, folks. People see Apple as a cash park and a flight to safety. Even more so than Google, which I think is really interesting. I mean, Google's down 1.86%, but folks, Apple, not only does it have the wind at its back for being a, what's it called, an S&P play, or really any of the big indice plays, but people see it as a flight to safety. It's incredible. I mean, even Microsoft's down about 1.18%. So anyway, crazy market. Thanks a lot, J-Powell. But honestly, you know what? Finally, the Federal Reserve U-turns a little bit on this inflationary talk. Now they're sending signals that, hey, we're going to go through probably a little bit more of a painful period here. We're going to have to raise interest rates and that sooner than expected potentially. And then when inflation rotates down, because at some point it will, either through their action or not, then they'll be able to unwind a little bit. Unfortunately, this does not bode well for the potential stock market over the next possibly 6 months, because tapering is ultimately becomes painful. Raising rates becomes painful. So moving all of this, the end of the taper up, it's no surprise that markets are selling off this much. Honestly, the only thing that would potentially be a surprise is that we're not selling off more. So I don't know if we're going to peter this kind of sell-off out until the next days. History will show us that everybody's going to buy the dip later today and markets are going to jump up. Really today, pay attention to that market closing. Are you seeing withdrawals from ETFs by seeing big roller coaster dumping sell-offs into the close? That's usually a sign of a little bit more pain to come, at least another day of pain to come. It's just a little bit of a signal. Not always guaranteed, but the only thing that's guaranteed is the fact that there is a coupon code linked down below that will expire at the end of this week. It is the Cyber Monday week coupon code. It's not as good as the Black Friday one, but you know what? It's the best that's going to be. Prices are going to go up again, and then we'll move on from sale season. All right, folks. Thank you so much. We'll see you in the next one. Goodbye.